Hello traders, we finally finished the Top Gainers trading plan forward testing. We've collected 100 trades worth of data. So in this video, I'm going to go over the results of that trading plan's forward testing as well as every single trading plan that I've written so far since I started trading about 2.5 years ago. So I started writing plans back in early 2021, and the very first plan that I wrote was the mid-cap test. And the reason why I started with mid-caps is because fundamentally, at least if you read on Investopedia or trading books, mid-caps are less volatile. They're supposed to be more predictable. So we made that assumption and we wrote a test around that idea, and we traded for a 2R profit target, which means that on every single trade, our profit target was set at 2 times our risk. I have an entire playlist of each of these trading plans on the YouTube channel, so if you want to see those trades, you can go back and look. But basically, the result of the mid-cap test was about break even. There just was not enough volatility for the stocks to go up to our profit target often enough. And even with a 3R profit target, it's definitely unprofitable, again, because of the lack of the volatility. So that brings us to the small cap test. The reason why, sorry about the landscaping noise in the background, this is the only time I have to make this video, so bear with me. But the reason why I went from the mid cap test to small caps is because that was the main theme that I noticed in the mid-cap test was the lack of volatility. What has, at least historically and fundamentally, more volatility than mid-caps? Small caps. So that's what we tested, and we tried to apply what we learned in the mid-cap test to the small-cap test. I increased the criteria for taking trades, for picking stocks. I made it very difficult to trigger an entry, basically. So the small cap test ended up being profitable with a 3R profit target. It gave us a profit of 15 times our risk after 100 trades. So it depends on how much you're risking. If you're risking $10 per trade, you'd be up $150 after 100 tests. If you're risking $1,000 per trade, sorry, did I do that? I skipped $100. If you're trading $100 and you've taken 100 trades, then you would be up $1,500, so on and so forth. You get the idea there. So that was the small cap test. The drawback to the small cap test was that it was very selective, so there was a lot of days where you weren't taking trades. Then the SPXL day trading plan came next. It kind of coincided with the small cap test. Like while I was waiting to finish the small cap test, I was working on the SPXL day trading plan. We are still currently forward testing that plan. I think we've taken 49 trades. So far it is profitable, and I really am enjoying this trading plan, the SPXL day trading plan, because it's very hands-off. But I have a whole playlist with those videos. Now today we're going to be talking mostly about the Top Gainers trading plan, because that is the plan that we most recently finished. Again, I apologize for all that noise out there. I'm trying to get this video done while I have the time. So let's go through the overall results in terms of profitability. This is a little bit redundant. We talked about it, but this will give you a little bit more detail. So the plans here are listed by order of simplicity and ease of trading, and that's important because the easier a trade is to plan, the more likely you are to be able to trade that plan and to stick to the plan. The more complex and difficult a plan is to trade, it may be more profitable, but it's going to be a lot harder to stick to the plan. So you have to find that kind of winning balance for you. That's going to depend on each individual trader. So the SPXL day trading plan and the Top Gainers trading plan are by far the simplest trading plans. SPXL is definitely simpler than the Top Gainers trading plan because you don't have to pick a stock. It's always the same ticker symbol each day, so that's why that's number one. That one is profitable so far at $12 per share traded after 47 trades. So again, it depends on the number of shares you're trading. If you're trading 1 share a day or 1 share per trade, you're up $12 at this point. If you're actually, this number is higher. I think it's about $14 now that we've taken 49 trades. So anyway, yeah, you would be up $14 if you're trading 1 single share, $140 if you're trading 10 shares, so on and so forth. You get the idea. Now, the Top Gainers trading plan, that one was a big loser, minus 20R after 100 trades, only 5 winning trades, shy of break even. That's an important thing to note because the profit target was a 3R profit target. If we would have won 5 more trades out of 100 trades, so only 5% more trades, we would be break even. So it just goes to show you how few trades it takes to kind of bring you back up to break even. But still, after 100 trades being down 20R, I am willing to say that this plan is unprofitable as is. And again, I'll show you the spreadsheet at the end of the video. The mid-cap test, as I said earlier, is break even. The small cap test, up 15R after 100 trades with a 3R profit target. That's important. If you use a 2R profit target, it was essentially break even. Where did the idea for the Top Gainers trading plan come from? It was an amalgamation of all my past trading plans and trading experience that I've had since I started studying and trading in 2020. To give you a little backstory, just because I don't think I've really talked about this much, and I think that this is important. In 2020, my beginnings to trading had absolutely nothing to do with the big pandemic sell-off, which is kind of unique to my story. Really what sparked me to get into trading when I did in 2020, and I got in late, for, as far as relative to that pandemic sell-off, I got in, started trading in May, was because I was finishing my bachelor's degree in physics, and I had the summer off. There were no classes I could take. I was starting my master's in the fall. There was no classes that I could take in the summer, and it was the first time in my life that I had so much free time. I was working on the weekends, but I still had a lot of free time during the week. So I thought, toward the end of that semester, what was I going to do with my time? And I noticed, of course, all of the volatility going on in the stock market with the pandemic. And the pandemic itself inspired me to look for a means of producing income while staying at home, because we didn't want to be out and exposing ourselves to the coronavirus. So that was a little backstory on how I got into it. But with the Top Gainers plan, I was trying to push the limits of simplicity in the trading plan, coming off of my most complicated trading plan today, which was the small cap trading plan. That one was very complex, but it was profitable. So it kind of shows you, I'm not saying that, the more complexity means the more profitability. It's so much more nuanced than that. That's something that's going to take a lot of time for a newer trader to understand, but there is a certain level of complexity that must exist in the trading plan. Otherwise it will not be profitable. So just keep that in mind. The basic ideas that are built into all of my trading plans, every single one that we talked about so far, is what do we know for sure? The only thing we know for sure is that we can't predict the future. So none of my trading plans rely on predictability of future results, or if we see this pattern, we know this is going to happen. No, we don't. What we're trying to do is find patterns that increase the probability of the trade working out. We don't know what the probability of those patterns working out, and that is a really key point, because if you read books or you watch a lot of YouTube videos on trading, I constantly hear traders saying, oh, whenever you take this entry, it works out 75% of the time. Yet they never have any statistics, they never have any data that they can show to back that up, which tells you right away that that is just simply not true. They don't know. They're just saying that there's this kind of pandemic of misinformation out there in trading, and that's one of the things that I'm trying to get a handle on myself and to share with you guys, that we just, there's no way we can know the probability of a trade working out until we take that trade 100 times or more, collect the data, and then we know the probability of that working out. So I can tell you the probability of the Top Gainers trading plan trade working out is about 21%. That's because I collected the data. We'll look at that at the end. So what do we assume? That if we have the proper selection criteria, reward to risk ratio, ability to execute, and unwavering discipline, the plan should be profitable. And I mean, every single one of those points in there, the selection criteria, reward to risk ratio, ability to execute, unwavering discipline, they're really important. Each one of those needs to be at 100% as far as, your ability to reproduce those things. And otherwise, and still the plan may not be profitable. That's why you have to forward test. So how do we find out if these assumptions are correct? We forward test. Back testing is not always possible. If you're looking to figure out how to become profitable with small cap testing or Top Gainers test trading or whatever, the only way to know is by forward testing, because the stocks are different every single day. So you can't just pick like a handful of small cap stocks, back test and say, oh, look, this entry was profitable with these stocks. Therefore, going forward, if I pick some other small cap stocks, or I stay with those 5 small cap stocks, that this will continue to be profitable. That's absolutely not true, and it's not going to be the case. So that's why forward testing is so important. So that means actually trading with real money, but a small amount that you can afford to lose, and collecting the data after 100 trades. Or from 100 trades. So key takeaways from the Top Gainers plan forward testing results. So it removes the feeling of time wasting that came from how selective the small cap test was. I don't know if you guys have been watching, my videos from the past, the small cap test. There were many days where I just sat around for an hour and weren't able to trade because nothing hit my criteria, and that did feel like a waste of time. Although after, it took me about 9 months with breaks, probably 6 months total, to collect 100 trades with that small cap test, it was profitable. So is that really a waste of time? If you're risking enough money so that 15-hour profit target, gets you $15,000 or $150,000 after 100 trades, it's probably not a waste of time. So the top gainers plan did not have that feeling of wasting time, but since it lost money over time, I would say that it spent money instead of time, or wasted money instead of time. So its simplicity made it easy to follow and easy to trade. Again, that's a nice thing to know because you want to try to find that balance of simplicity and ease of tradability, but of course it still has to be profitable. So you do need a certain level of complication and complexity in the plan. The wild variety of stocks that show up on the top gainers screener prove to reduce the probability of trades working. And that is kind of, again, an assumption. The only way we can prove that is if we kind of make the top gainers plan more selective, and we'll talk about that in just a moment. But basically, the top gainers list routinely produces stocks from the nano cap, micro cap, small cap, and mid cap sector. So that's a lot of different sectors. If you don't know what small cap or mid cap or any of those caps are, Google it or look at Investopedia and you will understand what those are and what they imply. The price ranges are also all over the place from the top gainer screener. You'll see stocks that have, are a few cents a share and sometimes over $100 a share. So that is a huge variation. So the variation in stocks traded may have, that's the key word there, may have added to the low probability of trades working out. The only way you know for sure that it decreased the probability of these trades working out is if you start to remove those things and then retest it. So it's a lot of work, but it's the only way to know for sure. Otherwise, you're just guessing. What can be done to make the top gainers plan profitable? First, increase the selectivity of the stock picking criteria. For example, no sub $1 stocks or no nano caps. Again, we can't say that if we remove those things that it's automatically going to be profitable. We'd have to start the forward testing all over again. Number two, add more entry criteria. Example, only after the high of day has been established and broken, then we take a trade on a pullback. So during this trading plan, we were waiting for the pre-market high to be broken and then taking the first, second, or third entry, depending on if the trade worked out after that previous high was broken. Or I should say it was the pre-market high or previous day high, whichever was higher. So the downside to adding more criteria is that occasionally you will have to let a 3R trade go by without you. And that's something you have to know ahead of time and be willing to accept that, when you make your entry criteria more difficult, you're going to miss out on some really easy trades. But if you take those easy trades over and over again in time, it could be unprofitable, even though occasionally they work out. So that's really an important point there. Number three, turn it into a short bias trading plan. And I say this and share this with abundance of caution, especially to newer traders. It appeared that if you would have entered short near, and that's an important word there, where we entered long, because the short entry is different than the long entry, even if it's just kind of the inverse of the pattern. I don't want to get into all of that because I don't want to talk too much about short trading. But basically, if you did what we were doing and entered short and set your profit to 3 times the risk on the way down, the price going down, this plan looks like it would have been quite profitable. But I absolutely do not recommend this for newer traders because shorting is extremely dangerous and adds all sorts of new risks that you probably don't even know exist that do not exist in long bias trading. So one of the risks is that you have to trade with a margin account. And that is another huge risk multiplier for new traders. So, and if you just Google, short traders losing money, I'm sure you'll find so many examples. I'm not saying you can't make money by shorting, but it's just not a place to start for newer traders. You should find a profitable long bias trading plan before you even consider short trading. And if you find a long bias plan that works, that's profitable, then there's really no reason to take on the risk of short trading. So the biggest overall takeaway from all 4 plans, and there's really a lot of detail we can go into here, but I'm going to just try to wrap this up quickly. But let me know if you have any questions down in the comment section below. But The takeaway is that the hardest part about trading is not about knowing where to enter or exit, because that should be built into the trading plan. It's not dealing with trader psychology, not anymore, because we've done so much forward testing that trader psychology is totally removed from the equation of my trading. But you have to get to that point if you're a new trader. And the same thing goes for sticking to the plan. I have absolutely no trouble sticking to my trading plan anymore. And that makes me pretty unique as far as what else you see out there on YouTube, because everyone talks about sticking to your plan, and then you see their live trades and they're saying, well, I broke my plan, I broke my rules, but hey, it happens to everyone. That's a bunch of BS. It's something that I think that differentiates professional traders from amateur traders. So once you have a plan and you've proven it profitable and you have your statistics and data to back it up, you will have no sense or no urge to break that plan, because you know statistically it works. So once you've mastered all the above, the hardest part is picking the correct stock. So that's the hardest part that the plan has to solve, is picking the correct stock. The plans that solve that problem from my set of plans are the only plans that are profitable so far. That's the small cap plan, the SPX, and the SPXL day trading plan. And that substantiates that claim, because they are profitable and they have a very strict criteria for picking the stocks. At least the small cap plan does. Obviously, the SPXL trading plan is trading the same ETF every day. So that removes that problem from the equation. So anyway, let's get to the spreadsheet, and we're almost done with this whole video. I know this is a lot of detail, but I'm just trying to share like everything I've learned, because I think there's a lot of good information here. So this is the spreadsheet that I tracked all of the 100 trades from the Top Gainers trading plan with. Let's just try to quickly go over it. Obviously, these are tracking the number of trades, the day trading account allowance, because I was using an account that I was doing multiple plans with. So I kind of allowed $600 of that account for testing this trading plan. Then obviously our P&L per trade, our percent change per trade, the ticker symbols, the entry price, the exit price, number of shares, which varied because we were trying to trade with about $100 per trade, so that our relative risk was close to the same on every trade. And that works out sometimes, not always, but on average it should work out. And then our commissions are zero because it's Webull, and SEC and FINRA fees a cent per exit, basically. It doesn't matter how many shares. And then our risk, our trade P&L, total P&L, and the rate of return or return on investment on each trade. Now, over here, we're tracking different profit targets, and 3R is highlighted because that is the only profit target that we were taking. That's where we were setting our profit target each day, but we were tracking multiple profit targets from 2R all the way up to 10R. And then we have our overall win rate. So actually it's 22% is the chance of these trades working out at this point. Entry number 1 was actually profitable, and that was because of the last 2 trades worked out. So it's just kind of barely profitable. But 25% is break even, so that's why I'm saying that's profitable. Entry number 2 was far from profitable, and entry number 3 was just under break even. Break even is 25%. And this was our account growth, which was actually a loss of 12% after 100 trades, with $100 on each trade. So again, if you consider, what if you just went out there and did something random for 100 trades, what do you think your account growth is going to be? It's almost certainly going to be negative, and probably a lot more than 12%. At least in this case, we gathered a lot of valuable data. But this plan was always a long shot. I'm not that surprised at this result because of the simplicity of the plan, but I thought that maybe, our edge is trader discipline. I can execute the plan the same way every day without falter. There's a couple of exceptions I'll show you. And then the ability to hold to our 3R profit target. I never exited early. I never stopped out early. And this was the other data that was really nice to have, because I felt like every single day I was going in knowing what to expect. The probability of a one and done day, 26%. Probability of a two and done day, so that means if the first trade failed but the second trade worked out, was only 9.5%. Probability of a three and done day, so this is the scenario where the first 2 trades fail, the third works out. And then the probability of a max loss day, meaning that all 3 trades lost, that was 33 1/3%. So that was our highest probability, and that's why this thing ended up being unprofitable. And you can see the P&L curve, which is also very interesting, I think, because see here where we started at 0 and we were trending up. There's like a nice upward channel here. Again, this tracks every single trade, not just each trading day. So that's why it looks extra volatile. You're seeing some of the losers of the day, and then maybe we ended up profitable at the end of the day. But anyway, we were trending up for about the first 20-25 trades, I believe, and then without changing anything, this thing just started bleeding off, and then you can see at the very end it just started to pop back up a little bit, but that's not very significant. And then if we go down here, we can see that our average risk was $3.79, and our total losses were $73.35. And let's look at our profit target results. So 2 and 3R were actually very close to the same on this one, and that was unexpected because in our small cap plan, 3R far exceeded the profitability of 2R. But again, I think that's just because of the wild variation of stocks that pop up on the top gainers screener. But notice that if we would have gone to 4R, 5R, 6R, 7R, 8R, 9R, 10R, that we would be at even greater losses, even though the rare occasion that those trades work out, they give you a much bigger profit target. You can see that a few stocks did go all the way to 10R, but that doesn't happen enough. That needs to happen more than 10 times in order for the 10R profit target to be profitable. And you see occasionally here like a 2R and a 5R, and that's all in the 10R column. The reason why that exists is because if the trade just oscillated around between our profit target and stop loss throughout the day, and we have to close it at the end of the day, then I wrote down, okay, here's how much profit we made by closing it at the end of the day. So that's where that comes from. So I think I went over everything, and I gave you as much detail as I possibly could without going too far overboard, hopefully. But just let me know in the comment section below if this video was helpful to you. Let me know if you have any questions about the Top Gainers trading plan or any of my other trading plans. I'll just tell you that for the future, I am going to have to discontinue testing trading plans for a little while. Other than the SPXL trading plan, that one I'm still going to be trading and testing and making videos giving you the results and updates regularly. But as far as active day trading, really active day trading, I do not any longer have time to do that because I'm preparing for board exams in January. So I have to kind of really focus in on that for the next 3 months. I've been working, believe it or not, been working since the end of June developing flashcards and digital flashcards, and just finished that yesterday. And so now, and I have tried to study the flashcards while I was making them, so it took a little longer, but now it's going to be just purely studying. So as you can imagine, there's tons and tons and tons of material for this board exam coming up. It's physics and medically related field. I just don't want to give too much away there, but yeah, it's not easy stuff. So anyway, that's going to have to be my focus, but you will see videos from me about the SPXL day trading plan, because the beauty of that plan and the beauty of trading SPXL is that it doesn't take hardly any time, no more than 5 minutes per day, and the videos are also very quick and easy to make. So I'm happy to continue to make those. Again, hopefully this video was helpful to you. Hopefully going over the trading plans and all of that. I'm going to make this document available on my Patreon website, probably for free, because it doesn't give away any real proprietary information. But we'll see about that. I'm always reluctant to give too much of this information away for free, although I did it here today, because it just takes so much time to develop it, and it really is unique to the content that I produce here. It's stuff you can't get anywhere else, and it's not based on really anyone else's trading. It's my own ideas. Yeah, maybe inspired by others, inspired by books, but then I try to infuse all of my, say, statistical and scientific knowledge and approach trading from a scientific standpoint. So again, hopefully everything makes sense. Hopefully it was helpful. Hit the like button if it was. Give me a comment down below. Just say hi. If you have a question, let me know. If you thought this was a total waste of time, let me know, and I'll get back to you. Subscribe if you haven't done so already. As always, go in every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.